yesterday's changes in bubble intervention level from the Ministry of Finance was quite different from the previous comments from the Ministry of Finance. And especially yesterday, Finance Minister Suzuki said that MOF is going to take bold action when necessary. And this bold or decisive is quite different from the previous his comment just saying appropriate action. So this changes from appropriate to bold or decisive is a clear upgrade in the bubble intervention level in my view. And in this regard, I think intervention risk has clearly risen since yesterday. And I would say if the line breaks 152, there is a quite high chance for the government to intervene in the market. So not this level below 152 yet, but above 152, we should see a real danger of the intervention by the Japan's authority now.
But if we see that intervention, you would have to assume that it comes via the way of selling off treasuries, and then unless you let the Japan yield curve run higher, you're going to still have those yield differential concerns, not to mention that we still have a very different M2 supply dynamic in terms of currency in Japan versus what you have in the United States just on a relative basis. So is it going to be effective in your mind? Is it all speculators that are driving this yen weakness?
I think it's true that the intervention alone cannot change the trend of the yen weakness, probably, but still, I think currently the positioning is skewed toward yen short at the moment, and position unwinding is possible when more intervene in the market. And also, due to concerns over intervention, I think volatility in the FX market can be higher, especially when more actually intervene in the market. And the higher volatility is not good for carry trade type and selling positions, and that can be also a reason for some and buyback as well. And also, as you mentioned previously, we had a three-party meeting yesterday, both MOF, FSA, and the BOJ joint, and they agree that volatility or volatile market movement is not good for Japanese economy. And in this regard, market will assume that Bank of Japan could be more hawkish if the MOF intervene in the market, and that can be also a reason for some position unwinding as well. So again, I may not say intervention alone can change the trend of the yen weakness, but MOF and the government can buy some time. And over the summer, not only the BOJ, but the Federal Reserve side can be somewhat negative for dollar yen. So I think that will be potentially a good strategy for the MOF to say have a stable dollar yen for the next 2-3 months by the intervention action.